This video is all about the Southwest Florida housing market crash from peak to trough. If you're new to the channel, welcome aboard. If you're a returning viewer, I appreciate your participation in our journey. And today we're going to cover all of Southwest Florida, every market that exists from peak to trough, so that you've got the best information to make the best decisions for yourself, for your family, and for your financial bottom line. But let's address the elephant that's in the room, the thing that everybody wants to know about, but a lot of folks will steer you in the direction of not wanting to believe, which is that mortgage interest rates are going higher, period. That's what's going to happen, at least within the near term. But we're going to do a historical deep dive to see what interest rates have been over time, so that you know, because I hear lots of industry professionals talking about things like you should marry the house and date the rate. And of course you should refinance if you can, but short term, is that really going to happen? And while I hope that happens, hope is not a balance sheet item. Hope is not something that you can bank on. I think it's far more instructive to show what history has shown us over time, what the mortgage interest rate market looked like in different economic stages, because the stage that we're going into is unprecedented. But nonetheless, today, Fed Chair Powell, good old Jerome, says that interest rates are likely to be higher than previously anticipated. Well, you don't say. I had no idea that that's what was going to happen. I haven't been talking about this for a very long time. Well, the reason I can say that with some measure of certainty is because I study history and I know what's happened in the past. And if we don't look to that for some guidance, chances are we're likely to repeat it. And the cycle of economic conditions that we're going into is completely unprecedented. Nonetheless, Fed Reserve Chairman Jerome Powell on Tuesday cautioned that interest rates are likely to head higher than central bank policymakers had, I'm not going to say expected, then had admitted, because these folks don't want to tell you the truth. They want to tell you what you want to hear so you don't freak out and the economy changes radically, and then the people that they want in office don't get reelected. He goes on to say, if the totality of the data were to indicate that faster tightening is warranted, we would be prepared to increase the pace of rate hikes. Well, it's not like they're hiding this from anybody. They've been talking about this and telegraphing this and letting everybody know that that's what they're going to do for a long time. So when I hear people talk about this refinance thing that might happen in the future, I just ask myself, what would Jerome say? And he's told us exactly what is going to happen. Powell goes on to say that the current trend shows that the Fed's inflation-fighting job is not over. Well, thanks for the update, CNBC. I appreciate that. And what has happened since? Well, the stock market, which prices in these changes instantaneously, sold off immediately. And I'm on the record as stating that the warning sign, the leading indicators that you need to pay attention to are things like the stock market. And right now, the consumer is not feeling pain. And right now, most folks, at least the folks in Palm Beach County, are not feeling pain. There is no recession. But make no mistake, when the stock market sells off radically and when the everything bubble bursts, I can assure you there's going to be a lot of folks that must sell their home because they have equity. And the truth is, right now, lots of folks have lots of equity and they feel rich because they feel insulated by this equity. Well, equity is not real. Equity is only realized when you sell. And if you don't sell when there is equity, then you get nada. And that's what we're likely to see in the future. And also, if the psyche of the market changes, if the psyche of the consumer changes, and there's a such thing as herd mentality, I can assure you that all of these people who are thinking about selling are going to hit the market at the same time, which is no bueno if you're thinking about selling. But it's very bueno if you're thinking about buying, because it's supply and demand 101. It's what's going to happen if the pain of recession gets bad enough. But let's look at history to see what interest rates used to look like, because I suspect that's where they're going. And I'm committed to telling you the truth, not necessarily what you want to hear, so that you can make the best decisions for yourself, for your family, and for your financial bottom line. And please stay tuned, because I'm absolutely going to cover the Southwest Florida markets, but it would be completely irresponsible of me to talk about that in the face of the changes that are happening as of right now today. And as of right now today, mortgage interest rates are pushing 7%. And that's if you've got perfect credit. If you don't have perfect credit, chances are you're paying 8, 9, or more percent. And that is not sustainable for most people, because most people who need financing don't have the money to be able to afford that mortgage payment, which again does not include everybody, but it includes a lot of people. This chart is a 30-year fixed rate mortgage average in the United States. And the most current data in here is from March 2nd, which is not today. Today is the 7th. And today interest rates are skyrocketing. And we know what the Fed has said they're going to do. So let's look back at history to see what that shows us. Because there's a lot of folks out there that have been completely spoiled and think that 2%, 3%, 4% mortgage interest rates are the norm. And the truth is, they're not the norm, not even freaking close. So let's look back at history. And to be totally transparent, even when mortgage interest rates were trading at damn near 20%, real estate always trades. It's always a good market for someone. So despite what the interest rate is, people will still buy and sell homes because they need a place to live. But the thing that will change are the values of those homes. Now, each market will trade differently, and there are some markets that are more insulated than others. But currently, as of today, I've got friends that are real estate professionals in Arizona that are getting shellacked by the market. I've got friends in Austin, Texas, getting shellacked by the market. I've got friends in Boise, Idaho, getting shellacked by the market. But we're going to do a deep dive into Southwest Florida to see what those home values look like peak to trough. But as you can see on this chart, if we go back to 2020, if we go back to, let's call this 2008, mortgage interest rates, 6.5%. If we go back to 2000, June 2nd, they were 8.5%. We're going back, people. Now, you might not think that interest rates are going to go back to these levels. And full disclosure, I could be wrong. It's not like I'm rooting for them to go higher. But I can plainly see on this chart that in recessions, interest rates go higher. And what do we see? If we go back to 1981 to be exact, they traded at 18.44%. That can happen again, period. And to be clear, I'm not rooting for that, but I would be completely irresponsible if I didn't at least point it out, because there's a lot of folks out there that think they're entitled to a mortgage interest rate under 6%. And newsflash, you're not. But let's see what the numbers say, because the numbers don't lie. And shout out to the SnapForce app, because that's what I'm using to show you this data. And to be clear, this data is not current. This is January numbers based off of Zillow data. And to be clear, I don't necessarily trust Zillow data to distribute the accurate information, because I've also found when I actually run the numbers in these individual metros, the numbers are a little bit different. But to give you a parameter, to give you a broad level overview, I think it's instructive, because the trends are relatively close, which is why it's critical to work with a real estate professional in the hyper-local market that you may be thinking about buying or selling, because there's going to be a different intensity of supply and demand, which will change from market to market. And as of today, Southeast Florida has continued to appreciate. We haven't really seen anything go negative, with the exception of Port St. Lucie. And I've talked about that in another video, which I'll link at the end. But today we're covering Southwest Florida, and we're going to start in the Tampa, St. Petersburg, Clearwater metro. We're talking about Hernando County. And what you can see, peak to trough, is a decrease of $300+ and a massive uptick from January 2019 pre-pandemic, right? From 2019, we've had 74.93% appreciation in the Tampa, St. Pete, Clearwater metro. Massive uptick. And January 2018 is even bigger, 90.88%, 91% appreciation. And for the first time in January, we're starting to see it go negative. We're starting to see it in the red, which doesn't exactly mean that there's been a crash, but it does mean there was a downtick in January. But relative to pre-pandemic, we're talking about massive appreciation, at least as of January 2023. Now we're going to work our way down the southwest coast. And what you can see in the same metro, but Pasco County, is a downtick of 29.56. Almost 1% peak to trough. January and December were both down negligibly, but there's a trend of downward movement. But there's been massive appreciation since pre-pandemic markets. 2019 increase of 63.5%. January 2018, an increase of 74%. Completely unsustainable. And the days of wholesale double-digit appreciation across Southwest Florida are very likely over for the near term. And I suspect that you're going to see single-digit growth in many of these markets. But for right now, at least in Pasco County, you've got slight depreciation and you've got a trend of 2 months. No bueno if you're thinking about selling, and great news if you're thinking about buying, except for the fact that interest rates are going through the roof. And now we're still in the same metro, but we're in Hillsborough County. And Hillsborough County peak to trough is down 1.42%, a whopping $5,500, which is great news if you're thinking about buying and probably not so great if you're thinking about selling. And to be clear, markets within this county are going to trade differently. So this is a 5,000-foot overview and is probably not accurate in the market that you happen to be shopping within this county, but the trends are not your friend. And we've got 2 months of consecutive downtick. 2 months of consecutive depreciation, but a massive increase from January 2019 of 59% and 68.66% in January 2018. So there's still plenty of folks that are sitting on plenty of equity, but the market is changing quickly and rising interest rates are no bueno for anybody, which takes us now to Manatee County. We're talking about Northport, Sarasota, Bradenton Metro. And what you can see is a decrease of just under 1%. And we've got 2 months of depreciation, 2 months of downtick. We've got the start of a trend, and the trend is not your friend. But relative to pre-pandemic numbers, we've got a massive uptick since 2019 of 65% and a massive uptick of 77% relative to January 2018. And to be clear, in this market, 80% appreciation is off the table for quite some time. Which brings us to Sarasota County. And we're still in the same metro of Northport, Sarasota, Bradenton, Florida, but we're talking about Sarasota County from a 5,000-foot overview. And what you can see is a peak to trough decrease of $3,400. And we've got 2 consecutive months of depreciation. So we've got a little trend here going, but massive uptick since January 2019 of 64% and relative to 2018, 71%. Massive increase, lots of homeowners that feel equity rich, and equity is not real, but that wealth effect is not going to work to their advantage when the recession pain becomes bigger, when there's unemployment, when there's a real change in the psychology of the consumer. And right now, nobody's scared. Everybody feels equity rich. For how long, yet to be determined, I don't know, but time will tell. Which takes us to Punta Gorda, Florida, Charlotte County. Peak to trough, down 1%, $3,741. A trend, 2 months of consecutive downtick, 2 months of slight depreciation. But relative to pre-pandemic numbers, massive explosion of equity for homeowners, up 69% in 2019 and up 79% in 2018. Completely unsustainable, but it is what it is. Which takes us to Cape Coral. And the Cape Coral market I've covered individually, but what you can see is a 1% decrease peak to trough. You can see a 1% decrease in January. You can see a slight decrease in December. So we've got a trend here too. And I've talked a lot about the fact that these markets trade very similarly. You're seeing a similar trend throughout Southwest Florida, which is completely different than Southeast Florida. For how long, yet to be determined, I don't know. I've made the argument that Southeast Florida is more insulated and there is no recession within this market, at least as of yet. But if and when that changes, I'm going to be the first one to tell you so that you can make the best decisions for yourself, for your family, and for your financial bottom line. But to be clear, we're talking about the big picture and the micro markets that exist within all of these metros, within all of these counties, are going to trade differently. So the trend might not be indicative of what's happening in the market that you're shopping in, which is why it's critical to work with a professional that understands what it is so they can advocate for you the right way. Which takes us to Naples, Marco Island, Collier County, and woo, we have a big trend, a bigger trend, I should say. And what you can see is January to October, negative. We're in the red. We're talking about depreciation, but peak to trough, we're down just under 1%, 66.54 to be exact. But relative to January 2019 and 2018, massive appreciation, lots of equity as of January 2023, lots of homeowners that are in there sitting on 70 or 75, almost 76% of equity appreciation, a massive uptick. And there are lots of folks that want to be in the Naples area. But this all comes back to economics 101. And when the pain of recession becomes bad enough, and there's 5% unemployment in this market, the market conditions will change. Period. That's what happens. And right now, the trend is not your friend if you're thinking about selling. And it's starting to become a little bit more favorable in most of these markets if you're thinking about buying. Which takes us finally to Margaritaville. We're in Key West. We're in Monroe County. And what you can see is a decrease peak to trough of $2,700. So a negligible decrease peak to trough. But you can see there's a downtick in January. And you can see there's been a massive uptick since the pre-pandemic market cycle. January 2019, up 75%. January 2018, up 80%. The folks down there that are wasted away in Margaritaville are sitting on a metric shit ton of equity, at least as of January 2023. Now, I hope you found this content valuable, and if you did, please subscribe to the channel, give it a thumbs up, share it with a friend. If you've got any questions, leave them in the comments down below. If there's anything I can do to serve or support you in my local market, please reach out and check out my next video because I suspect you will love it a lot. And until next time,